All right, so thanks for joining me. In today's video, I want to share with you an idea of what do you do when you have a large stake in a position, which you really shouldn't have too large of a stake in any one position. But if you do have a large stake in a certain position and it continues to lose money, what is it that you can do now? So I'm going to give you an idea behind it. It's not anything that's going to solve all your problems, but it'll give you some things to think about. And if you want to do some brainstorming with me, definitely check out our website at tradersfly.com. That's where I can work with you coaching one-on-one and give you more in-depth strategies and ideas and things you can play with. This is really the bulk of what I do is working together one-on-one or even working with people for 2 months, 5 months, 8 months, 9 months at a time, learning about option trading, verticals, managing portfolios, and that kind of thing. All right, so let's get started and we're going to kick things off. So let's say I've got this BBBY position, which I just got just a second, just to put it on for this trade example, just to discuss it. And this stock just continues to lose and lose and lose money. So ultimately what's going on and what's happening is I've got a large stake in this, and you might have gotten it in up here, or down here. And it doesn't matter which stock it is. The point is this stock is going down and it's a huge problem. So it's not good for what we've got going on. So what is it that we can do in this case? Because we just have a bunch of stocks. So let's say I've got 5,000 shares, or in other words, I've got 5,000 delta. Okay, so delta is the name of the game. 5,000 delta means I've got 5,000 shares, which means for every $1 it moves up, I make $5,000. Every dollar it moves down, I lose $5,000. That's the way delta works. It's your risk, but it's also your moneymaker. So you can see right now, as this stock is kind of heading higher, I'm up about $86. But let's pretend we're down quite a bit of money. So my big risk here is this 5,000. So these are your risks, and this is the Thinkorswim platform, but this is my risk. This is my price risk. Okay, this is my time decay risk, and this is my volatility risk. So I have 3 risks, but those are my money makers as well. So what can I do here if I've gotten some shares now and it's starting to go against me? Well, I'm losing money first off. Now, what's my next step? Well, I can cut delta, and there's a few ways to do that. Okay, so in order to do that, one, I can reduce the delta that I have here already. Now that could have some tax consequences and some other things, but I could take 5,000 shares and just take my loss right there and go down to, let's say, 3,000. Now I make only 3,000 if it goes up, but I only lose 3,000 for every dollar move it goes down. So that's the way that could work. Now, if you're dealing with option strategies, which is really the bulk of my discussion and the bulk of what I do with one-on-one coaching students, what you could do is go to, let's say, BBBY. And there's a lot of options out there, or choices that you have now between the 2-day, 9-day, 16-day, 23. The problem with this stock, it's only about $4.50. So there's not a lot of locations or premiums in there. But if you're in it for the long haul and you've been probably holding the stock for a while, you can still sell premium against it. So what we can start doing is start selling some premium, and I'm going to show you here. Okay, so why don't I go ahead and sell things at the 23-day, the 30-day, the 37-day. I'm going to go ahead and start selling things. So if I go to the 37-day, I'll go ahead and right-click sell. I'm going to go sell a single real quick. And I'm doing this quickly because, I'm just for video purposes. When I work with people, I work at their speed. But here we're going to go in and I'm going to start selling some at a higher price or level. So here I'm going to be selling at the 7. That means 100 shares will be gone at that $7 range. You can't even see it here. But if I continue to stack things, which you'll be able to see here, as this will slowly start converting. And what it's doing is really cutting my delta down. That's really the name of the game, but I'm also building some theta or time premium. So now if that stock pulls back, I can go ahead and make an extra $832 here. So this allows me to go ahead and collect some money as I wait for this stock to kind of come back slightly. It gives me a way to just make some money or premium as I wait, because that stock maybe isn't working as well. So if I did like 50 of these, and right here, you can see it flatlines me. So now what can I make? How much can I make from here? Well, that's $1,600. Okay. $1,600 that I'm making every month after month by selling these 7s. Now keep in mind that 5,000 shares did cost me quite a bit of money. So if I did 5,000 shares times $4.50, that's a $22,000 position, but I'm making back about maybe $1,000 each time from selling these premiums if I have to wait and if the stock's just kind of working against me. Now, I wouldn't do it all in one spot. You might say, okay, well, I'll sell, let's say, 15 over here. Let's go to another one over here, August 5th. Let's sell some 6 over here. So I could sell some of those. Let's sell another. Let's just do it in increments of maybe 20, might be better. Okay, and then we'll go 20 over here. So we'll let these kind of work in the meantime. So I'll send that in, I'll send that in, okay. And now what I'm doing is I'm cutting my delta slowly. Okay, so I got 20, 40. I'll do like 10 more. And I could do, let's say August 19th. Let's see if the 6.5's around. Nope. How about 7.5? Nope. Okay, how about 8? Okay, so I'll make another little bit right here. So it's pretty cool, right? So now I'll go ahead and now I'm hedged off and cut my delta risk right there. So I cut off quite a bit of my delta risk. And if I look at the expirations, you could see I've got a bunch of contracts here that I sold. Now, for more advanced people, just to give you a little nugget of what I deal with in the coaching students, we can actually sell more than what we've got. So I could go ahead and actually go in and switch this to a sell. And then what we can do is go, I'll even go over here and sell at the 9 right here. And I'll go sell 15 of these, sell 15 of those. So you'll see I'll actually sell more call contracts than I actually have. A little more dangerous. There's some different risks associated with it, but you can do it. And ultimately what I've done is cut the delta. It also allows me to make a lot more premium. So in general, what I'm doing is at the end of November, in this case, we're in July right now. So by the time you watch this video, it might be a different month because I pre-schedule them. But let's say we've got July, August, September, October, November. So you got 5 months to go. And you're making about $3,600 on this position that's about $22,000. So not bad to kind of pay for it. And you've cut your delta to 2,300. Now, the problem here is if it overshoots to about 10, 11, you've got some issues. But other than that, you know, not a bad way to kind of cut and trim your losses, right? So anyway, I hope that helps. Definitely check it out if you want to work one-on-one coaching sessions or even a longer 3-month, 6-month, or 1-year time period. Let me know. Reach out on the website at tradersfly.com. There's also some more insight on information about that in the description below. And I hope to see you, work with you, and train with you. So thanks again. And maybe I'll see you in the next video or even a live class next time. So, all right, thanks and take care.